Guess what? Anyone can assume a VA loan. That's right, it does not have to be a veteran. It actually doesn't even have to be a primary residence. More than likely, the person that's going to assume a VA loan is an investor. Why an investor? Because they got the cash and they understand the killer low interest rate that is on the loan right now is worth something. Let's use an example. Property's for sale for $450,000. The loan is at $390,000 because, let's face it, some time has gone by, the loan's a little smaller and the property's gone up in value. This is normal. Person assuming the VA loan is going to assume a $390,000 loan. That difference, 60 grand, is going to have to come from somewhere. Well, the investor looks at it and says, I was going to put down 20%. That was going to be 90 grand. So this is a good deal. This is less money out of my pocket. And I'm getting an interest rate at what? As opposed to an interest rate at, so this is where they look at it and go, I could buy your place for $450,000. Heck, I could buy your neighbor's place for $450,000. But I can't assume your neighbor's VA loan. I can assume this VA loan. I'll pay $460,000 or $470,000 for this property because it'll still work out better on the math than buying the neighbor's and putting down 20% and getting a way bigger interest rate. I've been on the investor side of the fence. I assumed a VA loan from a veteran in Delaware. She was in trouble. She was having health issues. She needed to move back to where her family was. She tried being a landlord twice, hated it. Said, you know what, this is not for me. I looked at it and said, wait a second, your mortgage is $700 and change, your rent is $900 and change. This does make sense as a rental. And she said, you want it, you can have it. And I said, I'll take it. So I bought her property from her. Now I get to have the property. I was out of pocket $4,000 to buy this place. That's it. Because in her case, her property was worth less than what she owed. Does that make sense to as an investor? Sure, because I'm worried about cash flow, not about the fact that it was upside down by 5 grand. And she avoided a short sale. That's what the bank told her to do, short sell her property. So we found a solution where she didn't have to short sell. I got an investment property and everybody was happy. Now, the one downside to this example is the veteran, her entitlement is tied to that loan, which I now have. So can she go use her VA again to buy another house? Yes, with her remaining entitlement, but that might not buy much house. So if this is something where the veteran says, oh no, I want all my entitlement back because I need to go use my VA again, then don't do an assumption. But if it's a situation where it's, hey, you know what? I'm never buying a house again, Ken. I just need out of this, which is what she said to me. So we said, you know what? No big deal. I assumed it, and this is a win-win for everybody. So if you're considering it, it's a great option. One more reason why VA loans are awesome.